right, folks, how you guys doing? Mike, thank you for joining me today.
My pleasure, my brother.
Folks, we have a true pleasure. We got a living legend here. We have with us Mr. Mike Sloan. He is an amazing dude, first and foremost, a great dad. His wife is probably one of the sweetest people I know. In addition to all of that, he's also the only, I repeat, the only Geico insurance representative here in the state of Michigan. I don't think you all understand how amazing that is, but that tells you about his professionalism and his ability to execute. So, with no further ado, let me turn this over to our friend, Mr. Mike Sloan, and he's going to tell us about the importance, especially as investors and homeowners, of having insurance. Take it, Mike.
Thank you for that intro, brother. Wasn't sure if you was talking about me or somebody else, man. Your words are too kind. Your words are too kind, man. But no, again, my name is Mike Sloan. So I've been in the insurance industry altogether for about 26 years. Started off as a claim rep, then went over to the agency side. Did that for about 10 or 12 years with one major company, and then went back into management, middle management, and helping another outfit, develop franchises across the state. And then I realized, you know what, the best seat in the house to me was being an agency owner. And so I found an opportunity. Geico came a calling, and I answered. Better yet, God came calling, and I answered. And like Jimmy said, right now, I'm the only Geico agent that has a physical location here in the state of Michigan. So it's been a blessing. It's been a blessing. Just a little bit about me, but kind of here to talk about homeowners insurance or just property insurance altogether. So, different forms depending on what your situation is. If you're a homeowner, then of course you're going to need a homeowners insurance policy. If you're renting an apartment or a house, then of course there's renters insurance. And then you have some investors out there who own property that they lease to someone else. That policy is what we call a landlord policy. So important to have each, depending on your situation, because if you don't, the consequences can be dire. Seen a lot of situations where things happen. We don't think they're going to happen. We hope they're not going to happen, but things happen, and it's good to have an insurance policy in place. And insurance is kind of one of those things where nobody wants to have it or nobody wants to pay for it because we're not giving you anything tangible in return. You're paying us your money. But you're not getting anything tangible in return. I mean, it's not like you're going out and buying a car and you have a tangible car or the house itself. What we're delivering is a promise that we are going to repair or replace what it is that you lost on a sheet of paper. And that's basically it. Because of that, a lot of people, they buy insurance, but they buy it begrudgingly. But when things happen, then we become, the consumer's best friend.
Absolutely. Absolutely. Now, you were saying that insurance is a promise. Basically, it's a promise to pay, right? And I always like to think of insurance as kind of like safety belt or seat belts in a car, right? Nobody really likes to wear them, but if you need them,
I don't like to wear them either.
You need them,
right? Yeah, I don't like to wear them either, but it's a little uncomfortable for me. But if something were to happen, I would be glad that I have it on.
There you
And
go.
same thing with insurance. You're glad that you bought that policy.
There you go. So you hit three types of policies: renters, household, and investors. What are some of the differences between those?
The major difference is what each policy is going to cover. There's a lot of similarities between each of them. They all have common traits. One of the common traits is that each policy is going to protect your personal belongings. So whether you're a homeowner or you're renting or you have rental property, there's a part of the policy that's going to protect your personal belongings. Now, in a landlord policy, there's not as much personal property to protect because you're renting this house to someone else. But as a landlord, you may own the refrigerator, the stove, the washer, dryer, and maybe even furnish the place itself. And so your landlord policy can and will protect, your personal belongings inside that landlord policy, just like a renter's policy would. And that's all a renter's policy is going to do is protect your personal belongings. So everything that you put on a moving van and move inside that home, that's what your renter's policy is going to protect. And of course, on the homeowner side, all your personal belongings are going to be protected. The major differences, though, is that homeowners, of course, is going to protect the dwelling itself. Landlord policy is going to protect the dwelling itself, but in a renter's policy, there's no dwelling to protect because your landlord's policy, your landlord, he or she has their own policy to protect that dwelling. So there's not as much coverage that you need on that policy. So those are just some of the basic similarities and differences between the three. But again, they're all important.
Okay. So one of the things that I've always heard, and now, when we were back in school, one of the things that we rented an apartment, they have that little pamphlet there, and they say, hey, look, you will probably want to make sure you get renter's insurance. Be honest with you, I never did. Because to your point, I didn't have much. It wasn't much for me to worry about. That and the fact that I don't know. I mean, I guess I probably could have afforded it, but in my head, I was like, yeah.
Right. As a college student, man, we could barely afford pizza on Friday nights. But, to your point, most people don't get renter's policy because they feel like, I don't have much. But, we see it on the news all the time where an apartment building or a house catches fire and all of your personal belongings are out the window. So if you have a renter's policy, we can furnish you, with that settlement check. It doesn't have to be a lot. It can be like $10,000, $15,000 in coverage. And in most cases, on average, because I quote renters policies almost every other day now, and you only pay maybe somewhere between $150 to $350 a year for a renter's policy. It's not protecting a whole lot, but then at the same time too, it's not costing a whole lot either. Which people would realize that more, that you may only pay like $17 to $20 a month for a policy to protect all your personal belongings, because you got to think about it, because protecting your furniture, your appliances, electronics, and all of your clothing. Now that's the big one, your clothes. I mean, that is kind of hard to add up, what your clothes are worth. But imagine, your apartment catching fire and you got to go out and buy all those clothes again for yourself, for your family. That's a large task to do. So a small renter's policy will go a long way.
Okay. Generally speaking, you said many people don't really have rental insurance. Are we talking like 10%, 20%? What are we saying in terms of the population that actually does?
I've never really seen any stats on it, but just out of my conversation with folks who rent apartments or houses, if I had to put a number on it, I would probably say at least 90% of people just don't have it.
Do rental policies also help with at least emergency housing needs? So for instance, technically here in Michigan, theoretically, we're in winter, even though we just have a light dusting of snow, right?
Right.
But usually this is the time of year where you see going back to your example, where people will have the space heaters in their room or in their houses. Something happens, the unit goes up in flames, and now everybody's flooded because of either they were burned from the flames spreading to another unit, or the fire people coming in and doing their jobs and drenching the entire building. Either way, your stuff is lost.
Exactly. One of the line items on that policy, whether it be a renter's or with the homeowners, is it's called loss of use. In other words, like temporary housing. So if, for example, the house does catch fire and it's not safely livable, and because of all the smoke and soot damage, your policy will provide a certain dollar amount for you to get temporary housing and food for yourself and your family until we get your place back into a livable condition. So both the renter's policy and a homeowner's policy will do that for you.
Really? Okay. Again, going back to that example that we talked about. I mean, I haven't seen any this year yet, but the winter is young.
Yes, again!
Because it's coming.
Right.
So when we see those things and we see those people standing outside, hopefully they have renters policies where not only their belongings are going to be covered, but in case the owners of the buildings that it happens don't have immediate access to places for them to go, they'll have some funds available from their renters policy to get some place to live while everything is being worked out.
Exactly. Yep. There's a yeah, on a renter's policy, there's a small dollar amount that will provide what's called loss of use, so that you have somewhere to go temporarily until either you can get back into your place or find to live. So it's smart to have it. It doesn't cost a whole lot. Um, a lot of landlords, and this is the smart part, a lot of landlords, they require their tenant to have renters policies, right? So just in case something like that does happen, before you move in, you have to purchase a renter's policy, and the landlord will require, if they're smart, they will require that they be listed as an interested party on that renter's policy, so that in case that renter's policy goes into a lapse, the landlord will be notified that John Smith's renter's policy has been canceled for non-pay or whatever the case may be. So the landlord is notified. Then the landlord can reach out to the tenant and say, "Hey, I got notification that your renter's policy has been canceled. You need to get it reinstated or find another policy." I see that quite a bit too. And if your landlord is good to make your tenants get a renter's policy before they move in.
Okay. Now, being an interested party doesn't mean that they are privy to the funds if something were to happen. It just means that they get notified if there's a change in the policy.
Right. Yeah. They're just an interested party. They're just listed on the policy just for notification purposes. If a claim does happen, the landlord is not privy to any funds from the insurance company. They're just notified whether or not the policy goes into a cancellation stage. Yep. That's all.
All right. I guess that's reasonable because I can see the pushback. I can see the immediate pushback there. Like, wait a minute, this is my policy. Why would I want them to know what's going on with me?
Right. Yep. The landlord's not interested in the funds, but yeah, they just want to be notified that if a policy goes into cancellation, then also two, if something happens to the tenant or one of the tenants, like for liability purposes, if it's as a landlord, you want that tenant to have that policy because if it's a liability situation, that tenant's guess will go towards your tenant's policy for liability purposes instead of coming to me as the landlord. Let's say there's a slip and fall, but it's really the tenant's fault. But if the tenant doesn't have a renter's policy, then that guest who got hurt, they could potentially come after the landlord. And so that's a kind of a layer of protection for that landlord, that renter, to have a renter's policy.
Okay, so just to recap, what you just said, I didn't know that. I always thought that whoever owned the property had complete liability, period. That is, from what you're saying, that's not the case.
Yeah, for the most part, they do. There's some situations where it might be the tenant's fault. So let's say the tenant's guest is inside the house, and they spill some grease on the floor, and then their guest slips and falls. Well, that's really that kind of goes back to the tenant, because why'd you have grease on the floor? That's a hazard, tripping hazard. So that guest can potentially sue. So it's best for, if I'm a landlord, it's best for my tenant to take responsibility for that, and that renter's policy will step in and make sure everybody's covered.
Okay. So what I hear you saying then, just to summarize, as from a renter's policy perspective, not only are your belongings covered, but you also do have at least some some entry level liability protection as well.
Correct. And usually it runs anywhere either $100,000 in liability, 300,000, 500,000, and in some cases, some will offer up to $1 million in liability coverage. And it's not just for a renter's policy, but the same thing goes for a homeowner's policy and a landlord policy as well. Homeowner's policy is the one that's most expansive, where it's going to cover the most, because it's protecting your biggest purchase, your biggest asset that you actually own. Most of us own is our personal homes. And so to go without insurance for that, for one, that your lender is not going to allow you to not have a homeowner's policy. But even if your house is paid off and you don't have a mortgage anymore, you still want a homeowner's policy. I had a situation where I had a client, her house is in Southfield, beautiful home, like sitting on a half-acre lot, nice sprawling ranch home, and caught fire, and she had about $300,000 in damage, fire damage. And so it took probably about close to a year to get that house back into a livable condition. The good thing about it is that, of course, she was protected because she had a homeowner's policy through me. And then part of her policy, that going back to that loss of use, it paid for her temporary housing in another house until we got her house back into a livable condition. So, just that alone. So just imagine if she did not have a proper homeowner's policy. That means that she would have to come out of pocket to repair that house and come out of pocket to find somewhere temporary, to stay. So, anywhere from, a homeowner's policy, it ranges depending on the size of the house, the location, all that good stuff. So you're looking at anywhere from, I've seen them as low as $800 a year to maybe 4,000 a year for the larger houses, or most of them fall somewhere in between there. But again, it's a small investment to have in case something major does happen.
That description is interesting and it's real.
Okay. So again, from a homeowner standpoint, based on what you just said, basically a homeowner's policy has not only protections for your personal belongings, but it also covers the dwelling itself.
Covers the dwelling itself. It covers what's called dwelling extensions or other structures, or basically anything that's part of the property but detached from the home. Like if you have a detached garage or a shed or a fence going around it, it's going to protect those belongings too. In addition to that, going back to your personal belongings, everything inside your home, whether it be clothes, furniture, electronics, appliances, the liability portion that we talked about before, either 100,000, 300,000, 500,000, sometimes even up to $1 million in liability, the loss of use for temporary housing. And then you can get into some other kind of like fringe coverages that are not necessarily required, but there are optional coverages like what's called backup of water and sewage or sump pump overflow. In case the city sewer lines back up, malfunction, and they back up into your basement, there's coverage for that. Or if your sump pump malfunctions and water backs up into your home because of that malfunction of the sump pump, there's a coverage there, either like $5,000, $10,000, $15,000, $20,000 in coverage there. I've seen claims where that has been involved, and it's good to have at least $10,000 in water backup just in case something like that does happen. Then there's coverage for buried utility lines, where your plumbing from the house going out to the street, somewhere in your yard, at some point it's going to crack, it's going to break. And so there's a coverage in your homeowner's policy that is optional, but it's good to have, where something like that does happen, your policy is going to pay for have it excavated, put back in place, and so you can start functioning again. So homeowner's policy in general is pretty expansive. It covers covers a lot.
Okay, so how about this? Why don't we do this? You just hit a couple of things. One, when you were talking about the sewage backing up in your basement, I was reminded of something that happened to my parents' house not too long ago when they live in the city of Detroit. And the city of Detroit sewers, that's basically exactly what happened. There was a major backup. I don't know what happened with the city. They flipped one switch as opposed to flipping another one. The back pressure pushed all the sewage back into the into the neighborhood. Of course,
yes,
it all went into their houses and whatnot. Now, as a direct result of that, all of our childhood stuff that we had down in the basement was all ruined, of course, and as well as my parents' stuff. Of course, I'm more interested in my stuff because, I'm the kid.
I'm just a baby.
All our stuff was gone. They ultimately had to add in some backflow preventers added into their sewage lines. And from what my dad was saying, I think that was his insurance. It was either a combination of his insurance or a settlement with the city, or maybe both. Is that the type of stuff that you're talking about having it covered?
That's exactly it. Yeah, because I even had a situation, I've owned single family homes as investments, and I had one on the east side, and that happened to us, my partner and I, where the water line leading from the house to the city connection, it was so old that it busted. And so we didn't have that coverage on that policy to fix it. So we had to come out of pocket to fix that. And it was, at the time, this was probably like 15 years ago. So at the time, it was about a $1,500 fix. I'm sure the cost has gone up since then. But they had to hire a plumber, dig up the backyard, take out the old, replace it with new. and then put all that dirt back to get it flowing again. So it's a nasty situation, but there is a coverage on your homeowner's policy that will take care of such a thing.
Now, is that a standard coverage or is that one that you need to add in, an optional?
It's an optional coverage. You have to add it in. So it doesn't come with it. So a good insurance agent will point it out that the coverage is available on the homeowner's policy and present it as an option, and then let the customer decide, whether or not he or she wants to add that part of the policy.
Okay. So let me ask you this then. So generally speaking, if you my brother,
Bro, come on.
brother, if I were to come to you and say, hey, Mike, look, I'm about to buy this house, or I have this house over wherever I live. Based on your experiences, what options should I be adding to my basic insurance policy? What are some of those?
The three biggest ones that I see is one, the backup of water and sewage. Again, it's optional. It doesn't come standard, but it's an add-on. So that would be one. The second one would be, as I was talking about, the buried service line coverage, to cover what we were just talking about, the utility lines buried underneath the property. Another one would be, and depending on whether or not you have this, is additional coverage for any jewelry and furs, or maybe fine arts or cameras. Most homeowners policy will cover a minimum amount, usually between $1,000 or $1,500. That'll come standard. But if you have more than that, a wife's wedding ring or fur coats, what comes standard on the policy may not be enough to cover all of what you have. So you can increase that amount, or you can add a separate rider or a separate policy to cover specifically for jewelry and furs. So those will be some of the things that, I would recommend adding, if the need arises, adding to a basic homeowners policy to make sure that you're fully covered.
Okay. Now, it's funny you mentioned the jewelry, furs, and other fine arts and stuff, because I was actually going to ask that. I always thought those were automatically covered within the standard homeowner policy. But what you're saying is they may be for a little bit, but it may not cover all of the total cost of what you're talking about.
Yeah, exactly. Most policy will cover about $1,000 when it comes to those things. If you just don't have, a lot of jewelry and furs, then there's no need to add it. But if you're out here balling and you got multiple furs and all these diamond rings and necklaces, you want those. Yeah, you will want those things protected. Yeah, absolutely.
That's right. That's why you have that policy, because those are taken care of. I understand. I get it. I get it. What about, let me ask you this, because this one happened to me recently. What about roof coverage? And the reason I ask about roof coverage is because, things are changing. We are, as a state, we've probably seen more hailstorms than we've seen snowstorms over the last few years. And specifically does have a dramatic effect on roofing shingles.
Right. So there is coverage for the roofs, but it really depends on what happens to that roof. Okay. So if it's a windstorm, hailstorm, a fire, tree falls on your home, that sort of things that are sudden and accidental in nature, then your homeowner's policy will cover those types of things. But if it's a maintenance issue or just plain wear and tear over the course of time, your homeowner's policy is not designed to do that, because it's not a maintenance policy. It's designed to cover things that are sudden and accidental in nature. But as we call it, as a lot of people call it, acts of God. Yeah, anything that's an accidental in nature, it's going to cover that. But if it's just normal wear and tear, because I get people call all the time, and my roof is 30 years old, I need to get it replaced. Will my insurance policy cover that? No, not really. No, not at all, actually. That's something that you have to maintain yourself over time. But your policy won't cover just basic wear and tear.
Okay. What about the situation where you have homes that are surrounded by mature trees? Two things happen, right? The mature trees are covering up the roofing, and they create an environment where you get a lot of moss and things that can deteriorate the roofing shingles.
No, because that's a maintenance issue. So as a homeowner, with those mature trees over time, it's really up to you to prune back those trees to prevent leaves and branches from falling on your roof. Most insurance companies, quite frankly, won't even cover your home until you remove tree limbs hovering over the roof, because at the beginning of a policy there's an inspection that's done, and if they see heavy trees hovering over your roof, they'll say, hey, you know what, Mr. Smith, you need to prune those trees back before we can grant you a policy. So yeah, if they see that, or even like during the middle of a policy, periodically they may do an inspection, a follow-up inspection, and they see those trees hovering over your roof, they'll say, hey, we need to cut those back. We'll give you, a couple months to cut it back, but if not, we're not going to renew your policy. So yeah, that's because I have mature trees around my house, and I've made it a point to, if I see a long tree limb growing over my roof, I cut it down. Because I don't want it to cause wear and tear on those roof shingles. Yeah, so yeah.
We're not even talking about the part about the potential that if it falls.
Right.
Yes.
Exactly.
Okay. So we just talked about what's going on above your home due to trees. What about roots and roots affecting your foundation? Is that an issue, or is that something that is actively covered or actively inspected for by insurance companies?
No, because that's a maintenance issue. Again, that's something that's developing over time. And so again, as the homeowner who's at home every day, you see those things developing. So you have to make it a point to cut those trees down, prune them back, or if you see a very large mature tree and it could cause not only fracture your foundation or driveway, but it could seep over into your neighbor's yard too. So the best thing to do really at some point in time before it gets really bad is to really just to cut the tree down and shave it down. If you can get the roots out of there, that's the best thing to do.
So we're not supposed to have trees around our houses anymore, man? Is that what you're telling me?
No, I'm not a tree hater at all. I'm not, but yeah, some trees become a nuisance over time if they grow too big. Because some are were planted when the house was built, and so 30 years later, that just imagine how big that tree has grown. So yeah, so not a tree hater. Just be careful with trees.
I don't know, man. You're sounding exactly opposite of a tree hugger. But I get it, you're right. So basically what you're saying is a lot of the environmental stuff that we can control, that it may look cute or whatever, but the reality is a lot of the things that we do on our properties that grow over time, those are not the things that are going to be covered by a typical insurance policy, even though when the issues happen suddenly, but they happen suddenly because they finally hit a breaking point.
Yep, exactly. Yeah. So just remember, insurance, whether it be homeowners or auto insurance, is designed to cover you if something sudden and accidental in nature happens. Not wear and tear, not a maintenance issue, but sudden and accidental are key phrases when you're talking about insurance.
Okay, so we've talked about the three types of insurance and the importance of those. Can you give us an example of something where somebody actually got caught out because they did not have insurance?
Yes, kind of going back to renter's policy. I had a client who they came into my office and bought auto insurance, and they were renting an apartment. So bought the auto insurance, and we presented them a package where they can combine the auto and the renters together, right? They said, well, I want to save money, so I'm just going to get the auto insurance. I'll come back and get the renters later. Well, later was too late, as it turns out, because their apartment building caught fire, at least part of it anyway. And the part that caught fire was one of their units, the unit that they lived in. And so they called back to the office after that happened and say, hey, do I have coverage for my personal belongings? And we had to tell them no, because, we offered it, but they declined it. And so now, they had to pretty much start over from scratch in terms of buying clothes, buying furniture, appliances, toys for the kids, and anything else that they had inside their unit. So I've seen that happen, several times. And it's a heartbreaking conversation to have that could have easily been taken care of at the beginning, but because they didn't have that policy, we couldn't help them. yeah, we couldn't help them.
And here's why I asked that question. One of the things that, as you know, since we own investment properties, one of the things that we see often, we'll see people take care of a lot of other things like their car and their TV bill and their cell phone, and they'll do all these things before they take care of their main like residence. I've always had this thing in my head. It's a matter of prioritization, right? If you don't have a place to live, then the fact that you have car like homeowners insurance is probably not a big deal. Or if you don't have a place to live, then having cable is not really useful.
Right,
It's not.
right.
Is that
Yeah,
some of the things that you see commonly in
yeah.
terms of people choosing one type of it or choosing to protect themselves via insurance or not, or doing some other things with their monies?
Oh yeah, you see people, they may not have any place to live, but they can watch that Netflix though.
Stay in bed and watch the sun creep in and binge watch obscure Netflix 90s TV shows.
So they can still Netflix and chill. But no, it is a matter of priority though. And the thing about it is it's not difficult to do. It's not insurance policy, whether it be homeowners, renters, landlord, or a condo policy, they're not really expensive at all. And even if you have to have, a policy that's full coverage, even if it's a little bit expensive for you, we can adjust some of the coverages, maybe either lower the coverages or maybe even raise the deductible to make the cost of that policy, more affordable. There's some things that are built into the policy that we can't really move a whole lot, but then there's some things that we can do. Maybe some of the optional coverages, maybe you forego that for a little while, or we raise that deductible from maybe 500 to 1,500. Or I've had a customer just yesterday. She's buying a landlord policy for a house that she's buying in Ann Arbor, ironically, and reasonable policy, but she didn't want to spend as much money on it. So what she did was she raised the deductible up to $5,000, and so that dramatically reduced the annual premium for her policy. And so now, it's affordable. So that's just some of the things that we can do to make it affordable so that you don't necessarily have to go without.
What does it mean to raise the deductible, and how does that, what is the deductible first off?
So your deductible is your share in the cost of a claim. I like to equate it to like your copay when you go to a doctor. Your health insurance company is going to pay for the majority of that doctor visit, but you're going to have a small copay, whether it be $10, $15, $20, or whatever the case may be. Same thing with the deductible on your homeowners or landlord or renter's policy. You're going to have a deductible. You're going to have a share in the cost of that claim. So, for example, if you have a $100,000 claim on your home because it caught fire, well, and you have a $1,000 deductible, so your insurance policy is going to pay that $99,000 to get it repaired, and then you're going to pay $1,000. And usually that $1,000 is going to be payable to the contractor that repairs your home. So it's your share in the cost of a claim. It's like a copay, to kind of put it in more, common terms.
You said $5,000, your client raised it to $5,000, and that seemed to be significant the way you described it. So if $5,000 is significant, what is a typical deductible?
Typical deductible nowadays is $1,000. Used to be a time where 500 was typical and standard, but insurance companies have made some adjustments. So now every quote that I run now is automatically set to $1,000. That's typical across the board. And like I said, some people, if they want to get the cost down, let's say if I raise the deductible from 1,000 to 2,000, how much money would that save? And and adjust the numbers, and we get to a point where they're comfortable. And so they just have to be mindful if a claim does happen. You do have a $1,000 deductible, depending on what happens too, because if an incident happens and the cost is less than your deductible, then there's no reason to even file a claim because, it's below your deductible.
Okay, that was gonna be my next question. Now here's a question. So let's say, for instance, you do have a claim, like let's use your client since she's not here and, she's not here. I'm not wishing anything bad on her or anything.
That's suspicious.
But let's say, for instance, she has a claim since she's in Ann Arbor, I'm assuming she's probably gonna have some student housing. She's gonna have students living in her properties. If that's the case, Maybe there's a bender one night, they may have $25,000 worth of damage, say.
Right.
If she has a $5,000 deductible, Geico is going to pay $20,000 and she'll pay the remaining $5,000.
Exactly. Yep. Exactly. That's right.
Does that reduce the amount of total insurance she has available if something else were to happen to the property? You know what I mean? So for instance, if she had a $500,000 policy, does that policy now, the available amount that she can spend, that she's covered for, drops from 500,000 to 475?
No, no, no.
No! God, please, no! 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 No!
Each event is its own separate event. So let's say, for example, this year she has a fire, and that fire was, 25, like you said, $25,000 claim. So next year, let's say the same thing happens, another fire, and it was another 25,000. So that claim from year one does not reduce the amount of coverage for year two, if that makes sense.
Okay. So is that 500,000 for the year, or is it per incident?
Per incident. Yeah, and in her case, she chose a $5,000 deductible because, one, it greatly reduced her annual premium, her price of her policy.
Sure.
And then two, she did it because, she has money, quite frankly, and she has enough in reserves set aside. So if a claim does happen, she can easily write a check for $5,000 and have that taken care of.
So there you go. But if she keeps having insurance claims, if you keep having fire claims, then that sounds like an insurance job and something's going to happen.
Yeah, and people have to be careful with that because I've seen that too. I think my first year as an agent, I was with State Farm at the time. I had a guy come in and he actually bought a renter's policy. At the time, I didn't know it, that he bought it with the intent to commit insurance fraud. So he bought the policy, and maybe probably about 6 months later, he filed a claim claiming that he went out of town, and while he was out of town, someone broke into his home, stole his personal items. And so he ended up filing a claim for it. It went to the claims department, and something triggered a red flag where something just wasn't right. And they caught it. And so they transferred it over to the special investigative unit. So when it went to the special investigative unit, these are almost like trained detectives. They are, super sleuths. They investigated it thoroughly. They went out to the place. They looked around. They knocked on neighbors' doors. They did a thorough investigation. Long story short, he caved under pressure and he admitted that claim was bogus. So they just shut down the claim. And I don't know if they took it any further than that, like pressing charges or anything like that, but they definitely shut it down. Yeah, that happens. Yeah, that happens. It happens, and it happens quite a bit. It happens quite a bit. So yeah, just be careful. Be careful. Just do the right thing.
Just do the right thing. I like that. Okay, so since we're getting into some of the shady parts, and we just talked about people doing insurance jobs, because I've heard of them too. I think we all have. We all have. It's part of society. Mm-hmm. I got a question for you, and this is one of the things that I have. As somebody who lived in the urban city, one of the things that I noticed early on was that when I was living in the urban city, my suburban counterparts seems like they paid a lot less in insurance. Is that true?
It is very true. Very true. So unfortunately, it rings more so with car insurance than homeowners. Quite frankly, zip code plays a factor in determining how much you're going to pay in insurance. And I hate to say it and I hate to see it. Our Detroiters, our folks, who live in Detroit are paying higher car rates, insurance rates than folks who live in the suburbs. In most cases, double what you may pay in the suburbs. So, the kind of a general trend is that in the core city, you're going to pay the highest rates. And the further you move out away from the core city, your insurance rates are less than what you would pay in the core city. It really comes down to activity, claims activity. Our folks in the city, they're paying more in insurance. But at the same time, too, there's more activity that happens in the city. We need stolen vehicles, cars being broken into. We're seeing now where, these catalytic converters are being stolen off of cars, breaking in homes. It's a tough situation.
Is it more of a function of population or is it something else?
Not necessarily population. It just depends on, not population, it's what's going on in a particular zip code. You're going to get a different rate for each zip code. So it depends on what goes on in each zip code, because in 205, what we've seen is that there's more stolen cars there than they're going to be in 239, for example. So because there's more, activity, I'll put that in quotes, stolen vehicles, accidents, etc., in that particular zip code. So the folks who live in that zip code, even though your record may be clean, you're sharing in the cost of what happens in that zip code. So you're going to pay a higher rate there than you are in others. Yeah, it's tough. It's really tough because especially when you live in that particular zip code, but your driving record is clean, you have no claims, you haven't done anything to contribute to these high costs, but you're paying for what's happening around you, unfortunately.
Okay. What about those efforts to include other factors besides location, like credit score and employment history? Are those some of the things that maybe Geico and other insurance companies consider?
Yeah, so when you're talking about insurance premiums, it's kind of like a big pot of stew. There's a lot of different factors that go into it. So, your driving history, credit score can be a part of it. The zip code, as I was talking just a moment ago, zip code, the type of vehicle that you drive, the age of the vehicle. So all these things go into this big pot, and what comes out of it is what's called, your insurance score. And
it's like a FICO score, I'm assuming. It's like a FICO score specific to insurance.
Yeah, it's like insurance version of a FICO score, so to speak. So those things go into a pot. And so it's more individualized now, which I'm kind of glad to see, meaning that, you and I can live next door to each other and we got similar houses, maybe similar cars, but you get a quote with Geico, I get a quote, even though we live next door to each other and have similar belongings, our insurance rates, we're probably going to get two different rates. Maybe not far apart, but we're probably going to get two different rates. Our rates are not going to be exactly the same because we have some individually unique to each one of us that's going to play a role in that insurance score. So that's why we're going to get two rates, even though we live right next door and have similar belongings.
Okay. Along that line, if there's a history of me filing insurance claims, so for instance, here at my own personal house, we had an insurance claim because we did have hail and wind damage on our roof. Right? Does that affect our coverages going forward and the cost of coverages going forward?
It does. And here's the thing too, each claim that you file, for the most part, I'll put it this way, whenever you file a claim, I'll use homeowners because that's, the main topic here.
Sure.
When you file a claim, your policy is going to cover it, assuming that it's a coverable loss. So the next time your policy renews, chances are you're going to see a rate increase because of that claim that you file. Unless you enroll in some sort of program where like accident forgiveness, but more than likely you're going to see an increase in your insurance rates upon your renewal. It never happens midterm, but upon your renewal, you're going to see an increase in your rate because of that claim that you filed. Even though it's not your fault, it might have been an act of God, you couldn't control it, but because insurance companies are paying out so much money in claims, they are looking for ways to recoup what they pay out.
It's like, we'll pay for it, but somebody's got to pay us though, right?
Right.
No good deed goes unpunished. just remember that.
Yeah, we'll pay for it, but you're going to pay us back. So,
It may not be today, but you will pay.
That's right. Over time, we'll get our money back. Yeah. So, insurance companies are there to help, but at the same time, too, they are for profit. They are to make money.
Okay, so Mike, I told you we'd keep it around an hour, and we're approaching about that time, so I don't want to keep you for too much longer. I know you got family activities to get to. So before we wrap up, I'd like you to just, tell us about exactly what you can do and how you can help our people over at Geico.
Yeah, so again, with me, you're looking at somebody who has, again, 26 years in experience from claims to agency owner to middle management. I've seen things from almost a 360 point of view. So I have experience, I've seen things happen. And so with me, whether it be homeowners, auto insurance, condo, renters, landlord, even life insurance. I'm licensed to do all of it. So I can give you quotes, see if I can save you some money. If I can, I'll let you know. If I can't, I'll let you know that too. I won't sugarcoat it. And so even if you don't buy insurance from me and you have questions about it, reach out to me. I'm on Geico's website. You can reach out to me, and I'll be more than happy, because I can talk this stuff all day long. So I'm be more than happy to help anyone that with any questions, give guidance, expertise. I'm not just an insurance salesman or agency owner, but I like to kind of consider myself like a consultant, if you will. So, but that those are some things that I can help you with. Again, whether you're with me, with Geico, or with another company, if I can't help you, I have plenty of friends, former colleagues, or other agency owners that are friends of mine for years. I can point you in another direction. So I have people who can help me if I'm not able to.
There we go. That's one of the really cool things I really enjoy about working with you and just knowing you for all these years. You've been one of my stable people when I really need some advice or need to get pointed in the right direction. I love coming to you with the different scenarios that I come up with, even though some of them are really weird. You've never not helped me. Even if you didn't have the direct answer yourself, you're always able to point me in the right direction. And I really appreciate that. And I want to say that publicly. So thank you.
You are very welcome, my brother. Very welcome.
I have one small question, and we need to get on. We need to do another call to talk about this. But you said Geico also offers life insurance. Is that term or whole life?
Both. Yep, both. I can help you out with that too. And that's another thing that, oh yeah, that's a whole nother phone call. It really, that's a whole nother podcast. It really is. Yeah, it really is. It's important. Yeah, yep. We'll schedule another one to talk specifically about that. Absolutely.
Absolutely. We'll take care of that one. We'll get that one done in the next month or so, or within the next few weeks. So, Mike, real quick, what's a good number for people to contact you at?
Well, my office number is area code 248-970-6080. Again, 248-970-6080. Or you can call me on my personal cell phone number, 313-478-1631. 313-478-1631, or stop by the office. I'm in the beautiful city of Farmington Hills, 30780 Orchard Lake Road, between 13 Mile and 14 Mile. Love my location. Great city of Farmington Hills. Blessed to be there.
What's your email address?
It is M.I. Sloan, M the Mary I SLOAN at Geico.com. We can go to Geico's website, www.geico.com, and then in the agency search part, you can put in right now. You can put in any Michigan zip code, and my ugly mug will show up as your nearest agent. So yeah, just go to Geico's website and put in the agent search.
There we go. Okay. Mike, I want to thank you again for taking up part of your Saturday here. I really appreciate it. I'm sure my people appreciate it as well. And they will definitely be in contact with you. I know I will be in contact with you again because, of course, I've got more questions because I always do have questions. So with that, Mike, happy Saturday, my friend.
Right back at you, man. Enjoy your weekend. We'll talk soon.
All right, sir. Talk to you later.
Okay. Talk to you later.